Morning, guys. It's Wednesday, May 28th, 5:24 a.m. Central Time. Grain markets are mixed to higher this morning. July corn futures up 3 cents at 462 and a half. July soybeans down 3/4 of a cent at 1061 and 3/4. July Chicago wheat up 5.5 at 534. July Kansas City wheat up 7 3/4 at 532 1/4. July spring wheat is up 10 cents at 606 1/4. USDA had its crop progress and conditions report out yesterday. Let's start there.
Initial U.S. corn conditions fell below last year's rating and expectations. The crop was rated 68% good to excellent nationally as of Sunday, slightly below last year's rating of 69% and lower than the expected 73%. States with a good to excellent rating of 70% or better include Indiana, Iowa, Kentucky, Missouri, Nebraska, North Carolina, and Pennsylvania. The U.S. corn crop was 87% planted nationally through Sunday, up from 78% the previous week. Soybean planting, meanwhile, was reported at 76% complete nationally versus 66% the prior week and 68% on average. States that are 80% planted or better include Arkansas, Iowa, Louisiana, Minnesota, Nebraska, and Wisconsin.
To go back to the initial crop rating for corn, it came in at 68% good to excellent. The trade had expected 73. Is that why the corn market's up 3 cents this morning? Maybe it is. There's not much correlation, if any at all, between May ratings and final yields, but you got to start somewhere, right? To go to planting progress, we have a problem. Let's skip over all this. We have a problem in the great state of Ohio. The Ohio corn crop was only 54% planted through Sunday versus 74% on average. So they're 19% behind the 5-year average. They were 14% behind last week. They've had a lot of rain over the last 30 days. This is a map from our friends at Crop Profit. The state as a whole has seen 124% of its normal rainfall. I have some more specific county-based maps here. There are several counties that saw more than 6 inches of rain in total over the last 30 days, and most counties saw more than 4 or 5. But some counties, specifically Seneca, Marion, Knox, Coshington, I'm sure I said that wrong. Licking County saw 7.3 inches of rain over the last 30 days. Fairfield County, Perry, Mocking, Clinton, and a whole bunch of areas of Kentucky also saw more than 6 inches of rain. These are not the only areas of Ohio that saw the rain, but those are the ones that really stuck out to me. So because of the slow planting situation, there's going to be chatter about acreage switching and prevent plant. So the final planting date for corn for crop insurance purposes in the state of Ohio is June 5th. So they've got a week, and you are not going to plant whatever it is, 45, 46% of the crop in a week. People will continue to plant beyond the final planting date. You incur a daily crop insurance penalty, but you'd have to make the argument at this point that some of the intended corn acres in Ohio switch to soybeans because the final planting date for soybeans is June 20th. You got another couple of weeks. Based on the prospective plantings report that USDA put out in March, Ohio farmers intended to plant 3.25 million acres of corn and 5.1 million acres of soybeans. So already more soybeans than corn, but you could see that exaggerated even more. So what do you see switched versus the intentions with regard to corn acreage? If you switch 10% of intended corn acreage, you're talking 300,000. Is that reasonable? I don't know. You guys tell me. I'm not in Ohio, but I would imagine at this point that chatter is very much ongoing. And the other thing is that there's more rain coming. They've got rain in the forecast for the next 5 days and then very widespread coverage through the 10-day period. So I would venture to say that the prevent plant stuff is on the table, that the acreage switching stuff is on the table. If you guys are in Ohio, drop us a comment in the YouTube video, or you can email me, info@standardgrain.com. Let's go to the wheat ratings.
U.S. winter wheat ratings declined for a second consecutive week last week. As of Sunday, the crop was rated 50% good to excellent nationally versus 52% last week and 42% on average. The rating fell below analysts' expectations of 53%, but exceeded the 48% recorded during the same week last year. Despite the decline, the rating was the highest for the week since 2020. U.S. spring wheat received an initial good to excellent rating of 45%, a significant decline from last year's initial rating of 74% and well below analysts' projections of 71%. Additionally, it is the lowest initial rating since 2021. The U.S. spring wheat crop was 87% planted nationally through Sunday, up from 82% the prior week.
That spring wheat rating is not very good. And I think they've had a lot of rain in spring wheat country, and perhaps the rain has been excessive. Maybe that's the reason for this. If you guys have some insight or ideas, let me know. North Dakota spring wheat was only rated 37% good to excellent. Am I reading that right? Yeah, I think it is. South Dakota was only 55. Minnesota was much better at 82. Montana was 36. So I don't know if this is because of excessive rain or what the deal is. I know they had some cold weather. They had some snow up there, all sorts of messy stuff. Let's get to wheat price action.
Chicago wheat futures posted a sharp decline yesterday as the July 25 SRW contract lost 14 cents to settle near 5.29 per bushel. The drop was largely due to recent rainfall across the U.S. plains, which improved crop moisture. Additional pressure came from precipitation in dry areas of Europe and the Black Sea region, easing supply concerns. The sharp sell-off comes after last week's weather-driven rally, which was fueled by fears of adverse growing conditions. Also yesterday, the July 25 corn contract closed unchanged, and the July 25 soybean contract posted a modest gain.
So wheat was off sharply yesterday, I think because of the rains that fell in the southern plains. Also, the Russian ag minister was out and had some positive things to say about the wheat crop. We're higher today, I think, because the ratings were down, and the spring wheat market is up 10 cents this morning, kind of leading the way. I think that's because of that initial crop rating, which was, again, not very good. When you look at winter wheat production in the United States, there's a very high density area that's in the western, call it 2/3 of Kansas, a little bit of what would be northwest Oklahoma, a little bit of Texas, Colorado, and they caught some rains here over the last 7 days. Some of the far western areas didn't see the rains, but a lot of areas did see the rains. And I think that is part of the reason that the wheat market has been under pressure.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video?
Talked about a bunch of stuff with Pete yesterday. The first question that I posed to him was, I said, Pete, let's pretend you were asleep for 12 months and you woke up this morning and you saw D's corn at 446. What are the first things that you're going to look at in terms of price action, future price direction, that sort of thing? We talked about weather and the impact there. We talked about the setup of the funds. Pete has been an advisor to the funds in previous careers. That's why he's so interesting to talk to. Snap cuts are super interesting and are going to have some impact perhaps on what you guys are doing. Biofuels we talked about today. Matt Bennett is going to be on for a 20 questions segment. We have questions that come in from our premium subscribers about grain markets and grain marketing, all of that stuff. Also, the transition planning series that we did with Chris Barron and Shay Folk was hugely popular. We're doing a final Q&A. There's going to be a transition planning mailbag video that we're going to do on Friday. That'll be out. Super interesting. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel it anytime. There's no other fee, no other obligation. Nobody tries to sell you anything else. What we do here on the podcast and on YouTube for free is a fraction of the content that we produce. We put a ton of great stuff out to our premium subscribers every single business day. If you want to see that stuff, sign up today. You can cancel at any time. No other fee, no other obligation. Nobody tries to sell you anything else. Sign up this morning. I'll forward you a copy of this morning's email.
Heavy rainfall is forecast to ease drought conditions across southern China. Key agricultural areas in the region could receive more than 10 inches of precipitation. The forecasted rainfall follows last week's storms, which improved soil moisture in northern wheat producing areas. Additional rainfall is expected in the wheat belt this weekend. While this week's moisture will likely be beneficial, authorities have warned of potential waterlogging, which could lead to crop damage.
I'm not seeing 10 inches in the models. I'm seeing more like 5 to 6, and that's in a smaller pocket. Some of the northern areas of China winter wheat country aren't going to see anything, but I guess they see this as being a positive. China is the world's top wheat producer, or was this past market year, probably will be again. USDA, interestingly enough, if you look at the new crop import forecasts for corn and wheat, they're projecting that corn imports jump from 8 million metric tons this year to 10 million next year. And wheat imports, they're projecting jump from 3.3 to 6. And we hope that they're correct about that because we can use all of the usage and demand that we can get on the global market.
U.S. corn shipments declined last week, but remain strong. USDA reported that 55 million bushels of corn were inspected for export during the week ending May 22nd. The print was down 21% compared to the previous week, but up 24% versus the same week last year. Soybean shipments were near the lower end of pre-report expectations at 7 million bushels. The print was down 14% from the prior week and down 13% compared to the same week last year. Wheat shipments surpassed expectations at 21 million bushels. The print was up 30% from the previous week and up 41% versus the same week last year.
Corn shipments again, excellent. And there remains this kind of argument / narrative out there that, you know what, USDA is going to have to come up with old crop corn exports. They're going to have to do it because the pace of shipments is strong. The pace of sales is strong. The front loading argument is very clearly dead at this point. But then you've got the counter argument that, well, you know what, July corn's only at 462 this morning. That means that USDA must be off somewhere else, because if the carry out was really 1.3, we'd be trading north of $5, right? So I think the idea is that people believe USDA is either overstating feed demand or perhaps they're understating last year's crop, but people feel like there is something amiss because the price action doesn't line up with the printed fundamentals. And I guess we'll find out later. It may not be till September.
President Trump's CFTC nominee is facing scrutiny over cryptocurrency ties. Brian Quintez is a former CFTC commissioner and currently serves as the global head of crypto policy at Andreessen Horowitz. Quintez also holds positions with other crypto-related organizations. This week, he disclosed assets worth at least $3.4 million and pledged to resign from his crypto roles if confirmed. His nomination comes amid internal turmoil at the CFTC and growing debate over the agency's role in regulating digital assets. Congress is considering legislation that could significantly expand the CFTC's authority over cryptocurrency markets.
I don't know if I like the extended authority over cryptocurrency markets, but the people voted for Trump, and Trump discussed crypto and Bitcoin at length during his campaign. So this shouldn't be a surprise that you've got a crypto guy in for CFTC. Maybe more importantly, as it relates to you guys, we discussed, I think last week, the proposed extension of grain trading hours. And I think that would apply to cattle and almost everything on the CME, which is an absolutely just terrible idea. We don't need to extend commodity trading hours, especially agricultural commodities. The day that they go to 24/7 grain trading, that may be my last day as a podcaster, Mackenzie. We'll find out.
Oh,
Or maybe that'd be my last day in the brokerage business. I don't know. It's stupid. I don't want to work 24/7. Come on.
Oh, jeez.
Come on, get out of here. What did cattle do yesterday?
Cattle were lower. Live cattle were 67 cents to $1.52 lower. Feeders saw losses ranging from 102 to 222. Box beef was mostly unchanged. Choice was up 30 cents at 361.85, and select was down 49 cents at 350.83.
Outside market's pretty quiet this morning. The Dow's off 20 points. The S&P's up 2. Bonds are off a little bit. U.S. dollar's flat. Crude oil's up 64 cents in the July WTI at 61.53. Have a great day, guys. We'll be back on Thursday.